Good morning, I'm Maiki Oreta and you're watching Business 360, where we break down the numbers, connect the dots, and give you the developments and the insights you need to navigate, adapt, and lead. Let's dive right in. Dollar reserves climb to a one-year high with surging gold holdings strengthening the country's financial buffer. Debt payments plunged nearly 70%, giving the government a rare window of fiscal breathing room. The Asian Development Bank slashes the Philippines' growth outlook after a sharp third-quarter slowdown shakes business expectations. The Bangko Sentral ng Pilipinas signals room to cut rates as soft demand and cooling inflation create space to ease. Global rice prices fall to their lowest level since 2017 as stronger domestic output reduces the world's import needs. The Philippines' financial shield gets stronger as dollar reserves rise for a second straight month, hitting a 13-month high of $111.07 billion on the back of surging gold holdings. This is critical for the Philippine business community, providing a safer buffer against peso volatility and global market shocks. Gold stocks jumped to a record $18.03 billion, boosting the country's overall reserve position, even as foreign investments and foreign exchange holdings declined. Economists say that the Bangko Sentral ng Pilipinas has been stepping in to smooth peso volatility, a key issue for importers, exporters, and companies with dollar obligations. The country's reserves remain more than adequate, covering 7.4 months of imports and about 3.8 times the Philippines' short-term external debt, providing a critical safety net amid global uncertainty. Now, rare fiscal breathing room this month. The national government's debt services plunges nearly 70% in October to 65.78 billion pesos as fewer maturing securities sharply cut amortization costs. Now, this matters for the Philippines because lower debt payments can temporarily ease borrowing pressure and improve fiscal space. The Treasury says interest payments made up most of the total at 57.37 billion pesos, with domestic interest costs rising even as external interest payments declined. From January to October, the government's total debt service reached 1.93 trillion pesos, slightly higher than the same period last year. The Asian Development Bank is sounding the alarm, cutting its growth outlook for the Philippines for this year and for 2026 after the economy slowed sharply to 4% in the third quarter. ADB officials say that the new forecasts to be released on December 10 will fall below the government's targets following a weaker than expected 5% average growth from January to September. NEDA Chief Arsenio Balisacan says that the sharp deceleration was driven by a drop in public construction, partly due to tighter project validation and ongoing corruption issues. With governance concerns now weighing on investor sentiment, the ADB warns that reforms are critical as growth is unlikely to reach 5.5%, that government target for the year. Now, with growth cooling and demand losing steam, all eyes are now on the Bangko Sentral ng Pilipinas and whether it will deliver another rate cut this week. Economists expect a 25 basis point reduction amid subdued inflation and weak momentum. Inflation eased to 1.5% in November, giving the central bank more room to act, this according to analysts. They say that a rate cut would help support domestic demand, align the Philippines with global easing cycles, and reduce pressure on the peso. The BSP meets this Thursday, December 11, for its final policy decision of the year as the economy continues to cool after third quarter growth again sank to 4%. On another front, global rice prices have dropped to their lowest level since 2017, a rare break in a volatile commodity market and one that matters for the Philippines as a major importer. A new report from the United Nations Food and Agriculture Organization shows just how fast prices have been easing worldwide. The FAO All Rice Price Index fell to 96.9 in November from 98.4 in October, as better harvests and weaker import demand pulled prices down. Basmati and jasmine declined, while Japonica and Malagkit edged higher. Thailand and Pakistan saw some price support from government policies, but India and Vietnam pulled back as they wait for clear signals from the Philippines. The country is set to lift its 4-month import ban in January, with new rules aimed at protecting farmers and stabilizing supply. officials are reminding traders to diversify sources and avoid speculative buying that could push prices up again. Now, big win for healthcare, but a new problem for public finance. The Supreme Court has struck down a key budget provision requiring GOCCs to remit their excess funds to the National Treasury. And that now raises serious questions about billions already transferred. The High Court ruled that the 2024 General Appropriations Act overstepped, saying Congress cannot force GOCCs to surrender unused funds outside the laws that govern their operations. The decision comes after the healthcare sector secured a 60 billion peso return, but lawmakers are now calling for a full audit of all excess fund remittances. They're warning executive agencies to respect constitutional limits on appropriations and ensure money is used for its intended purpose. Attention is now on the PDIC's 107 billion peso remittance, a critical issue because the fund protects bank deposits, as well as 9 other GOCCs whose transfers under the now voided rule are still under review. Now, more Filipino households are set to gain electricity, a critical driver of local development and business activity, as the National Electrification Administration targets a 94% electrification rate by 2026. With its budget nearly doubling to 5.8 billion pesos, the agency is ramping up projects to bring power to more homes and communities nationwide. But NEA still faces hurdles. Bad weather, challenging terrain, and staffing gaps continue to disrupt day-to-day operations and timelines. Nationwide electrification now stands at 91.7%. Administrator Antonio Marinao Almeida says that the push for universal electricity by 2028 will prioritize areas with the widest gaps, which are Mindanao, BARMM, Negros, and the Cordillera. On another front, EU-Philippine trade is losing momentum as red tape, policy uncertainty, and costly administrative hurdles continue to slow European business activity in the Philippines. The European Chamber of Commerce of the Philippines' 2025 Business Sentiment Survey flags 4 major pain points. That's high import charges, bureaucratic red tape, lack of transparency, and unclear environmental rules, all of which raise costs and slow trade. The European Union remains the Philippines' 4th largest trading partner, making up about 7% of total goods trade in 2024. Any slowdown has direct implications for exporters, manufacturers, and local suppliers. The EECP says fixing these structural barriers will not only speed up trade flows, but also help restore investor confidence, a critical factor as the economy faces a weaker outlook going into 2026. Now, as global trade braces for new U.S. tariffs, Asia, including the Philippines, has posted a surprise export surge. Regional shipments jumped, defying expectations of a slowdown. The United Nations Conference on Trade and Development says 12 Asian economies saw exports rise nearly 10% in the first half as companies rushed shipments ahead of the tariff deadlines. Global trade grew 4% in real terms, while the dollar value of exports rose 2% to almost $12 trillion. Taiwan led with 25% growth, while the Philippines and Vietnam posted 15%. Philippine exports reached $70.43 billion from January to October, up from $61.9 billion a year ago. Now, monthly shipments now average at $7.2 billion, the highest level ever recorded for the country. Now, Philippine agriculture is expected to rebound next year, growing 3 to 4% in 2025, driven by stronger crops and a solid recovery in poultry, according to a UANP think tank. The key growth drivers, crops, poultry, and expanded agricultural services, helping the sector bounce back from last year's contraction. But the headwinds remain: high input and logistics costs, unpredictable weather, and structural gaps and biosecurity risks continue to put pressure on producers. Looking ahead to 2026, crops may see flat to modest growth. Livestock could recover slightly. Poultry is expected to stay strong, and fisheries may decline. Now, on another front, a salary-lifestyle mismatch is at the center of a major corruption controversy as Commission on Audit Commissioner Mario Lipana faces questions over how he accumulated hundreds of millions of pesos while earning a modest government salary. Despite a monthly salary of about 200,000 pesos or 2.4 million pesos annually, Lipana bagged nearly 500 million pesos between 2022 and 2025. His deposits averaged 110 million pesos per year, up sharply from just 12 million annually over the previous 16 years. The Anti-Money Laundering Council describes these figures as, quote, manifestly disproportionate to his lawful income, end quote, and says they form part of an ongoing investigation. The timing also raises red flags. The surge coincides with his tenure as COA commissioner and with flood control contracts won by his wife's company, Olympus Mining and Builders Group Philippines, which secured nearly 200 million pesos in DPWH projects. Now, the economic outlook for 2026 is being reshaped to the downside by global risks, yes, but even more so by governance failures right here at home. Corruption probes and spending cuts, both in government and across the private sector, are now dragging down growth expectations and adding new risks for businesses and investors. To help us assess how deep the economic damage could run, we're joined by Emmanuel Leco, the Chief Economist of Credit Rating and Investor Services Philippines and Senior Fellow at the Center for People Empowerment in Governance. Hi, Mr. Leco. Good morning, and thank you for being here with us.
Good morning. Glad to be here.
Okay, Mr. Leco, we've already slowed. The economy has slowed. GDP print in the fourth quarter was down to 4%, well below everyone's expectations, and lower the reduced expectations of our government for the full year. The lower band was at 5.5%. It doesn't look like we're going to be hitting that. And with all of these corruption probes, how much more growth is at risk?
Well, I think we have compromised already about 20% of the potential growth that we were expecting. Considering that the expected growth rate for this year was already a reduced target, that is quite a big loss to the economy. It's not exactly encouraging for many.
It's hard to do business in an environment where 20% of the growth is going to be shaved off. That's a good 1 to 2% of the actual GDP figure. How would you describe the state of the economy today, sir?
Well, we're kind of shaky at this time. I think I'd like to be optimistic, but there's not much for me to go to and support that kind of optimism. Right now, global watchers of the Philippine economy are projecting a reduced growth rate, definitely not quite far from what we were expecting that we will take after the pandemic.
Yeah, the slowdown. Tell us, sir, where is the slowdown most pronounced? I mean, we're seeing it in our major drivers. We're seeing it in consumer spending. We're seeing it in public spending, which is a major driver of growth. Where are you seeing this drop in growth the most, sir?
Well, public spending definitely slowed down the economy. It represented about 20-30% of our GDP. But the consumer spending represents a lot bigger of our GDP. So where do we see that? People are not spending as much. We look at breakdown of consumer spending. They slow down on food. They slow down on house spending. They slow down on a number of things that normally would have picked up around this time.
Yeah.
But this is December, so people are, I think, gearing up to
tighten
spend
their belts.
more. Yeah, and
it's supposed to be. This is the time where we're supposed to spend more, and people are still trying to do that. But looking into 2026, what's hard is that businesses are also slowing down their forecasts, their capex plans, and they're not launching new projects. And how worrisome is that for you, sir?
That's quite worrisome. That's quite disturbing. That means that for the common people, that could mean reduced opportunities to work, reduced purchasing power, and therefore they will be the ones to suffer from this slowdown.
Yeah, I want to talk about some hard numbers. The 6.8 trillion peso budget. What are the red flags there, sir? The Senate says that it's corrected errors, where critics are saying that this budget raises more uncertainty. What about this budget is problematic to you, sir?
Well, they still have components that are considered allocable, meaning
Discretionary.
based on some unknown formula. They're considering number of people, population, land area. It's similar to the LGU internal revenue allotment, but definitely I think that will be more whimsical on the part of whoever is making a decision on
that's the problem. We've got the allocable and we've got the non-allocable funds, and the allocable funds, that's what's discretionary, and corruption is a human problem, and the discretion of individuals, that's where we fall. What is the solution to this, sir?
You know, from the budgeting process point of view, budget items are supposed to be supported by feasibility studies, financial, economic, technical, and so forth. But right now, the discretion of legislators, discretion of public officials are becoming to be the rule in making a decision on which projects are supposed to be included in our budget. And that is the major problem, that's the major weakness in this budget process. Now, formulation, preparation of the budget is already problematic. It becomes even more problematic when the execution comes in. Because the lack of transparency, accountability gives way to people who are trying to hide something.
Drilling down to that, in the proposed 2026 budget, you know, 52 billion pesos is going to go to the DPWH. Given the systemic corruption, what are the economic risks of putting 52 billion pesos into an agency that is still under investigation?
Well, to me, that sounds like throwing good money after bad. So I'm totally against that. I think before they start putting money into DPWH projects, they will have to straighten up the agency.
In the meantime, sir, we have to go a little quicker. We're tight on time. Let's talk about the national debt service in 2026. 2 trillion pesos, 30% of the national budget. You know, it's a growing debt burden. How heavy is this risk? I mean, interest and principal, these are that we're going to be paying provisions from the previous administration, from the pandemic. They're maturing in 2026. Are you worried about the growing debt burden, and how heavy is the risk to the economy?
Well, first, borrowing is not bad. What becomes terrible is that if the budget or if the money was put to bad use or if it was stolen. Now, 2 trillion going to debt service, that is terrible for the economy. That means it's only paying for previous programs. It's not going to be put into productive use during this year. So that's worrisome.
Very worrisome. Sir, I wanted to ask you, the president blew the whistle on this massive corruption issue, but how would you rate his follow-through? It's been 4 months and 10 days since the SONA on July 28. Has the action been serious enough?
The process or that issue should not have been taken as business as usual. You don't make a decision or you don't make a declaration and then follow through with just an organization or establishment of a committee that up to now people are wanting to see transparency and accountability. They said they will live stream, but then when
may
resource
executive
persons
may executive sessions, hindi rin natin nakikita. So sir, a rate 1 to 10, the president's follow-through after having blown the whistle. 1 being the lowest, 10 being the highest. How would you rate this administration's response?
2 or 3.
2 or 3 out of 10. Okay, I also wanted to ask you, Budget Secretary Amena Pangandaman resigned after the corruption controversy. How culpable should she be as the leader of the DBM in this situation?
I thought that was a long overdue resignation. Once she said, or once she made the declaration that the mandate of the DBM was only to consolidate, I think she misread the mandate of the department that she was supposed to be leading. Department of Budget and Management was supposed to not only to consolidate. They were supposed to be gatekeepers.
Of the inflows and the outflows.
Exactly. And they were supposed to align the budget with the medium-term national program. If they see it as not aligned, they should have blew the whistle right there and there.
Yeah.
So I think a lot of culpability rests on the DBM.
Okay. All right. All things, everything said, what's your outlook for 2026 for the Philippine economy?
I don't want to be the gloom declarant.
But you also have to be real.
But realistically, we don't see any bright lining in the horizon at the moment. I think the government will have to do a lot more. Put people, bring people to justice, those who were culpable, those who stole money, make sure that they were taken to justice. Prosecute, recover, and make sure that they never return to public service.
All right, top economist Emmanuel Leco, thank you so much for sharing your insights on Business 360 with us, sir.
Thank you for having me.
Okay, now we're going to take a look at global markets. They're starting the week on a cautious note with U.S. inflation data, Fed policy signals, and European uncertainty all shaping risk sentiment for Asia, including the Philippines. Now on Wall Street, stocks closed modestly rather higher on Friday, extending gains even as a long-delayed inflation report showed price pressures remained sticky. U.S. futures were flat to slightly lower late Sunday as investors await another expected rate cut from the Federal Reserve this week. Now, Dow futures and S&P 500 futures and NASDAQ futures all dipped fractionally. In Europe, trading ended mixed on Friday. The UK's FTSE 100 and France's CAC 40 pulled back, while Germany's DAX added 0.6%. Now, taking a look at Asian markets this morning, the Nikkei 225 is trading to the downside, but not by much, down by just 0.1%. Hong Kong's Hang Seng Index down as well, down by 0.5%. Shanghai's Composite trading to the green, trading to the upside, up by 0.4%. And Singapore's Straits Times Index down by 0.25%. Now, so far, no trading today at the Philippine Stock Exchange, as today is a holiday, December 8th, as we celebrate the Feast of the Immaculate Conception. Now, as we close out the year, it's easy to get caught up in the headlines, the challenges, the corruption probes, and the market volatility. But amid everything, one question matters more than ever. What keeps us rooted in the Philippines? And what makes this country worth believing in? So we asked some of the country's top business leaders one simple question: what do you love about the Philippines? And throughout December on Business 360, we're sharing their answers, reminding us of the strengths, the values, and the stories that continue to define our country. Our featured voice this morning is a woman who has spent her life elevating Filipino talent on the global stage. Doris Magsaysay Ho, the president and CEO of A. Magsaysay Incorporated, leads one of the Philippines' most respected shipping and logistics groups and serves on the boards that shape business, education, and social progress. Here's her message on what she loves about the Philippines.
I love the Philippines because of the warmth of the citizen caregivers, hospitality workers, seafarers, teachers, farmers, and educators, chip designers and engineers, and my colleagues all inspire me. It shines in music, arts, and innovation, bringing color and beauty to the world. Their strength, joy, and generosity teach me what it means to care and hope. This spirit is uniquely ours. Storms and hardship, Filipinos rise with grace, rebuild and move. But resilience should no longer be an excuse. We need to work together to build institutions and systems for public services, for education and skills that are relevant for job readiness, so everyone can succeed wherever our journeys take us. Because the Filipino spirit has already done more than its share. By working together, we can all play a role to give the Filipino people our greatest asset and blessings, the future we all deserve. Mabuhay ang Filipino.
And that's it for Business 360. I'm Maiki Oreta. Thank you for joining us, and keep it here on BNC, the Bilyonaryo News Channel.